All right, all right, all right, all right. Thank you for joining. Thank you for joining. Thank you for joining for today's class. It's really amazing having you guys here tonight. So, basic, basically, we're going to talk about um basics of forex. Okay, another person join us. I hope you can hear me. Ogene Broom,
Good evening, boss. How far?
I do, my boss.
Good evening,
You're welcome. My boss, you're welcome. Your boy is loyal, sir. All right. I said
welcome.
basically, can you all hear me? Can you all hear me? Please, I want to be sure that you guys can hear me before we continue.
Can you hear you? Yeah, I can hear you. No, but yes.
Yeah. All
Yes,
right.
we
All
Well,
can
right.
I'm
All
hear
right.
you.
All right. All right. So this class is going to be interactive class, an interactive class. Basically, we want to talk about forex trading, forex, the financial market, um, what it is and what you need to start trading the financial market. All right, so I'll be sharing my screen now. I'll be sharing my screen. Um, so let me share my screen. I'll share my entire screen for us to see. All right, can you all see my screen? Can you see my screen? Please react. You can comment, you can see my screen, just comment on the private chat, you can chat, comment, you can see my screen so that I will forge ahead. I want to make sure that you guys are following. I want the comment section to be very active, please. So you can just type, you're following, you can see my screen, you can see my screen, you can see my screen. All right. All right, I've seen one. Okay, great, great, great. All right. So the first question goes like this. If I open my slide and my PowerPoint, currently I'll be typing and we'll be writing it together. Before I go there, so basically what we are trading is the financial market. So I want someone to what do you have like what's your idea about the financial market? When you hear financial market, what comes to your mind? You can type when you hear about market, market basically. So you can type or you can just unmute yourself and talk. Let's interact. Let's interact. Ah, Matabaraka. All right. So we can interact. When you hear about financial market, what comes to your mind? What comes to your mind? It's a basics. It's a beginner's class. So we want to touch from the very scratch. Then we'll move to the top. Can you hear me? Please, let's be very active. Let's be very active, guys. Let's be very active. Let's be very active, guys. All right. I think I will call someone now. Fejiro, when it comes to when you hear the financial market, what comes to your mind? When you hear market, layman market, what was the market? Okay. First thing that comes to your mind, okay, Bruno says is buying and selling, okay, market exchange of goods and service of value. Great, 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 great. I love this. Right? Yeah, yeah, yeah. That's correct. So when we talk about the financial market, right? The financial market, can you all see my screen? Can you all see the PowerPoint slide that typing and we'll continue as the class goes on, we'll be typing. So the financial market, when you hear the word financial, the financial market is any place or system that provides buyers and sellers. Like I said, market is a place where you buying and selling, all right? Buyers and sellers, the means to a system that provides buyers and sellers the means to trade financial instruments, including bonds, equities, currencies, and derivatives. We don't need to go deep into that, but we'll just use currencies. So any place or system that provides buyers and sellers the means to trade currencies, all right? So you want to be trading various currencies like your GBP, USD, your various currency pairs, your GBP, USD, Euro, USD, what again? And so on. There are many. So the financial market is divided into how many do we have? We have six. Can now be broken down into six. You see, forex market. You hear about the forex market. You hear about the crypto market. You hear about the indices market. You hear about the bonds market. You hear about the synthetics market, which will be trading and will be doing our analysis and everything from. Then you hear about the stocks market. All right, can you hear me? Can you hear me? I want to be sure you hear me, and I want to be sure that you are understanding what I'm saying, right?
Yes, we can hear you.
All right, all right, all right, all right. Thank God. So we have the forex market. The forex market is one of the biggest. Is not even one. It's the largest market. It's the largest market that has over $7.5 trillion liquidity every day. That means the market moves $7.5 trillion moves in the market every day. Then maybe followed by maybe the stocks by billions, 5 point something billion moves, crypto and all, and the synthetic that will be trading. We can either, because basically I want to teach you how to trade forex and synthetics, but majorly I trade synthetics, the volatility 100, the VIX 75, and all right. So the forex market has the largest liquidity. A lot of traders trade the forex market more than any market. It has a lot of liquidity. All right, that's why it's the most traded market, right? All right. So how do you trade the financial market? We have the institution trading. One, the institution trading, and under the institution trading, we have hedge funds. Hedge funds. You can browse about hedge funds and the banks. That's the way the big banks trade. They have a lot of liquidities. They have a lot of money to push the market. They have a lot of money to trade. So there's a way they trade. That's the institutions. They don't just trade like the way we trade. And also the retail trading, which is we small boys that have maybe $100, $500, $1,000, $10,000, $50,000, $100,000, $200,000 is still small compared to you see big banks trading billions of dollars. All right, so we are just very small in the market. So the retail trader, retail trading, the way we trade retail, we small traders, me and you, or maybe some of you are big sharp, maybe I don't know. You guys might be billionaires, who knows? But me, I'm a retail trader. So there's the technical way of trading, there's the fundamental, and there's the sentiment. I won't talk about many, but I'll just talk about the ones that you really need. There's also discretion, coming, discretionary. Yeah, there's also discretionary. All right, so basically the ones I will be talking about, you have the technical and you have the fundamental. I'll just give you stuff break. All right. So now let's talk about the forex market. So the forex market involves buying and selling of currencies. Take note of that. Buying and selling of what currencies? Buying and selling of currencies, right? When I say currencies, that is you are trading one currency for another currency, one currency for another currency. For example, when you want to trade something like GBP USD, you are trading GBP against USD, or you are trading USD against Japanese yen. Those are currency pairs, right? Right, right. I want to be sure that you guys are following. Those are currency pairs. Are you guys following? Let me move. Let me continue. I want. Okay, all right. Yes, yes, following. Great. So we have trading of various currency. You can even trade Nigerian naira, that's NGN against USD, right? You can trade it. It's on the market. If you go to your trading view, your tool for analysis, you will see it there. Technical involves tools. I forgot to say that. So you can put in front of technical, maybe you're jotting, you can put tools and involves history. That's you're trading using past prices, what happened in the past to predict what's going to happen in the future, and you're using various tools. You meet a lot of tools that will help you to trade, your Fibonacci tool and all that, right? And then your fundamental involves news, um, government policies, economic data, and all that. So you see in the forex space whereby you need to be very careful if you are trading in forex market. You need to be very careful because news can come out basically, and maybe when the interest rates, how does news work? I think I've explained it on the first class, that first class we had. Maybe you can watch that again. Let's say the interest rate for a particular for USD increase, right? Let's say by 10% or by 5%. You see many people who want to invest in USD because the return will be high. So that will make the price to go up because the demand is not high, right? Demand and supply. I talked about demand and supply, right? All right, so let's push further. Let's push further. Um, so right? In the financial market, okay, I think, oh, sorry, I think we should go to the next page. All right. So the financial market, I'm still in the financial market. Now everything is under the financial market. Forex, synthetics, and all they're under the financial market. All right. Let me reduce this to like 28. All right. So the financial market, um, Forex, Forex has 4 trading sessions. 4 trading sessions. We have the New York session. Write that down. New York session. We have the Asian session, which is divided into two: Tokyo session and Sydney session, and we have London session. What does this session do, or what does this market trading session? What are they like? All right. So, in a particular time when New York market might be open, or when London market might be open, New York is still not open yet because of time zones, right? So you must understand what these trading sessions are. It's not like I'm going deep into it, but I'm just talking about it so that you know. In crypto, there is no trading session, no trading session, right? No trading, sorry, no trading session. In synthetics too, synthetics that will be trading, no trading session. And also synthetics, in synthetics we have is every day. You can trade the market every time, any day, Saturday, Sundays. But on Sundays, for the financial market, you can't trade on Sundays. The market closes. All right. In synthetic, there's no close. Crypto, there's no close. Market moves. All right. All right. I think, are we getting it? Are we getting it? Are we getting it? Let me know. Let me know. Let me know. I want to, before I move to the next. Before I move to the next. So I said there are four trading sessions. Who can tell me the four trading sessions? The four trading sessions. You can unmute yourself and talk. Oh. All right. You can unmute yourself and talk.
Four trading sessions are New York. Yeah.
New York, yeah, the New York session. We have the Asian session, and I said the Asian session is divided into two. We have the Sydney and the Tokyo. Then we have the London session. That's correct. That's correct. All right, and that means you are following. Good, 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 good. So how do you trade as a retail trader, right? Because we are retailers, we are retail traders. We don't have enough liquidity. When I say liquidity, we don't have enough money to trade the market like the big banks. We don't have enough money to trade the market like the big banks. So how do we trade the as a retail trader? How do we trade? Remember, I said we use technical analysis, fundamental analysis, sentimental analysis. How to trade as a retail because every one of us fall under this category. Even if you are trading if I $1 million safe, you are still a retail trader. Yeah. You are still a retail trader. So how to trade as a retail trader that you are, right? So let me increase this a little bit. All right, and bold. Okay. All right, all right, all right, all right. So I said that we trade the we trade the as a retail trader, we use technical analysis. There's what called technical analysis, fundamental analysis, sentimental analysis. All right. So what you need as a retail trader, the first thing you need your device. You need your device, which is your maybe your system, your phones, right? Your device. That's all you need, and you need a broker. All right. We're going somewhere. We're going somewhere. Just follow. Follow. All right, follow. We're heading somewhere. So your device, you need your phones, your tablets, your laptop, and all that. And in that your device, you need your MetaTrader 5 or 4. There's the 5 or the 4. The 5 is the more is the most is more sophisticated. Is it has enough a lot of tools than the MetaTrader 4. So it's the advanced type of MetaTrader. It's still like the same thing. But we trading synthetics, take note, as we are trading synthetics, which is the one we'll be trading the most, uses MetaTrader 5. So you need to download MetaTrader 5. And you can also use it for your currencies too, for your Forex. That's your GBP USD, Euro USD, your gold, and all that, right? So MetaTrader 5, you need your MetaTrader 5, and you need a broker. And the broker will be using, also, you need a trading view, right? You need trading view in that your device. You need trading view, and maybe you need to download the broker. For me, I'm partner with Xness, and also we're using Deriv too. So these are the two brokers. Okay, I will just add it below. That's in the broker side. We have Xness, partner there. I don't know. I sent the link, my partner's link there to the group. So Xness, and we're using Deriv. Deriv is the one that provides the synthetics we trade. Why I basically use Xness for currency pairs. Are we getting it? Are we getting it? If you are getting it, please say you're getting it. You're understanding. You're understanding. You're understanding. You can unmute yourself and talk. Let me know if everybody's flowing. Yeah, great, 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 great. All right, all right. So if you must trade as a retail trader, you must have this, right? So let me explain what a broker is. I won't be typing, but just listing. So a broker is the middleman between the trader and the market. So it's a broker that gives you access to the market. You cannot just come and say, "Oh, I want to trade the financial market." Oh, yeah, trade it now. You have the money to trade, but how do you trade the financial market? You have to meet with a broker. A broker, you need to register and you know sign up with a broker. So the broker will be using his Xness and Deriv. So I said he's the middleman. You understand? Like I said, we do not have the enough liquidity. We do not have enough money to trade. So what the broker does for us is that the broker helps us with what we call leverage, gives us leverage. When you say you are leveraging on something, what does it mean? Please, if you're there, you guys are beast academic gurus. So when you say leverage, so what the broker provides for you is leverage. Are we there? Are we there? So when you hear leverage, what comes to your mind? All right, I want to hear you speak. Fejiro, you said more like a backup stake. Mm-hmm. All right, let's have more leverage, something available for you. All right, all right, all right, all right, all right. You can even check Google and so Google says leverage is the ability to influence situations or people so that you can control what happens. Like I said, we don't have enough liquidity to trade the market. So what the broker does for you is gives you leverage so that you can still engage in the market, so that you can still participate in the market. So you see brokers telling you, let's say you have $100 account in the market, in the financial market, they are not seeing it as $100. So what they are seeing it as, depending on the leverage. So you see something like 1 to 100. That 1 to 100, what the broker is now seeing, what is it? What is seen in the financial market is not $100. Is now $10,000. You see something like 1 to 1,000. That means that your $100 you funded is showing in the market as $100,000, but it's $100 you have. Abeg, don't say I told you that if you found 100, you. Oh my God! So you get what I'm saying? You get what I'm saying? You just have to. It gives you leverage, like to help you to participate in the market. We are retail traders. We don't have much money to move the market or participate in the market. Any question? Any question? Any question? So where does synthetics trading for? All right. What does it fall into? when we hear synthetics, what comes to our mind? What are we going to do? So the word synthetics, what does it mean? Let's go again. Synthetics. What does it mean? Synthetics. When you hear synthetics, what does it mean? So the word synthetics means artificial, is not natural. Wow, that's great. Scholars are here, scholars are here, scholars are here, scholars are here. Kai, Kai, Kai. That's great, that's great, that's great. You guys are active. So synthetics, artificial. So I don't even need to type self, I'm stressing myself. So synthetic is artificial, that's something that is manufactured, something that is not real, something that is man-made. So you now know where there is when we say something is derived, that means it's not the fundamental. So they looked at the fundamental, which is Forex. A human being now said, okay, let me create something that looks like it. So it's man-made. It's man-made. It's man-made. It's man-made. Are we there? Are we there? Are we there? All right, all right, all right, all right. So it's man-made. It's artificial. It's artificial. So when we say it's artificial, it is a product of a broker. It does not exist on its own. It's a broker that brought it. It's a product of a broker. It's a product of a broker. And what did I say a broker is? A broker is the one that now provides leverage for you to trade. That means you have enough. A broker connects you to the market. So synthetics, derived synthetics for traders to trade. All right. So one of the advantages of synthetic market is that it's not time bound. That means you can trade anytime, any day, 24 hours. See, the man looked at Forex and saw, there's a deficiency. Why can't I trade on Saturdays? And on Saturdays are the days that I'm free. So why can't I trade? Instead, I'm the market is closed, so I can't participate in the market. So let's go to the advantages. I'll just read it for you. Put it down. The advantages, the advantages of synthetic markets. We have fundamental, right? We have fundamental. We have. Can you all hear me? Please mute yourself and talk. We have fundamentals. I want to be sure that you guys are hearing me. We have fundamentals, right? No fundamentals. Advantages. All right, all right, all right, all right. Advantages of synthetics. No fundamental effect. That means news cannot come out and say the market want to now spike. The market want to NFB. Most of the news impact, high impact news we have, excuse me, high impact news we have NFB, we have CPI, PPI, a lot of things, right? If you go to your forest factory, whereby you see the news that is coming up on the forest base, you see those stuff there. NFP, non-farm payroll, one of the biggest news that comes out. Interest rates, non-employment rates, employment rates, and all that. Those are the things that affect the market. You understand? So in synthetics that we trade, there's no fundamental. Then there's unlimited leverage. Unlimited. Unlimited is one advantage. It's not limited to one something. No, it's unlimited. One to infinity. That means you can grow your $1 to $1 million trading synthetics. You can grow your $100 to $100,000. I've seen that result. I've seen that result. I've seen that result before. Someone grew $100 to $100,000, held the trade for 2 months. I tell you the truth. 2 months trade, held it, and he made $100, $100,000. All right. So another one, no time limits last session, like I said before. No time limits and session. Disadvantage, since it's owned by a broker or a person, it can be easily manipulated. That means the broker don't want to lose money. The broker tries to protect himself. So you need to trade in such a way that you are trading in line with what the broker or the what the big guys are doing. The brokers are the big guys. They have the money, so they don't want to lose. You understand? They are the owner of the market, so they don't want to lose their money to you. So they are not, in fact, they are not in your favor at all. They don't want you to make money. So they will do anything possible for you to lose money. All right. So they are easily manipulated. That's one disadvantage. Second is more risky. When we say more risky, that does not mean all we say is your capital is more exposed because it's very volatile. Synthetic is very volatile. I knew how much I lost today. So synthetic is very volatile. You can lose $100,000 in seconds. All right, can lose $100,000 in seconds. Lesser regulations, less analytical approach, and so on and so forth. So, how do you start now? So, we need to create an account with Derry. You can all see my screen, right? So, what you just do, how to start is you go to your Chrome, right? So, you type deriv.com. All right. So, this is what we want to be trading, right? So, you type deriv.com and you sign up with Deriv. You sign up with them. Sign up, put your email, right? Sign up and all that, so that then they'll give you a demo account at first. But I won't go into that. Maybe later on, maybe you can ask questions on how to sign up on the group and all that. Maybe if you are confused, it's not hard. Create your real account and all that in USD and all that. So let's leave that for now. Can you all hear me? Please, you can hear me. Identify that you can hear me. All right, all right, all right, all right. So now a complete, like I said, we are using tools. Do you understand? We are using tools, and one of the tools I talked about was Trading View. Trading View. I talked about Trading View, right? I talked about Trading View. So now, the Trading View we use for Deriv is different from the Trading View we all know. This is the Trading View that is very popular for currency pairs. You can see the pairs that are here: Euro USD. Can you see Euro USD? You can all see my screen, right? Euro USD. You can mute yourself and talk. Euro USD, GBP USD. You will not see synthetics, your volatility 100 and all that. So what we use for synthetic analysis to analyze the trading tool we use, the trading, what we use, the platform for analysis is the trading view Deriv. This is it. This is where you see your volatility 50, your volatility. You can see derived, right? You can see forex, stock indices, commodities, derived, cryptocurrencies. But in that other one, you will not see derived. So you have to come here to do your analysis and then you trade from your device, right? So now this is how basically your chart is. This is how basically your chart is. This is how it is. So what do we want to do? We want to what? Buy and sell. So this brings us to what is buying and what is selling. When you say you are buying, you want to you are expecting the market to go up. So you are buying to expect the market to push all the way up. All right. So when we say we are buying, you are expecting a move to happen, something like this, a move to be going up. The candlestick to be, but if it's coming down. So we have um how do I do this now? All right. So I don't know. In the last class, I think I explained, or I think we should answer some questions. But these are your trading. These are your chart is. This is how your chart looks like, right? These are your chart. Look like volatility 10. You have volatility. So let's see. Let's answer. Let's see if you can answer some questions on this. Okay. I think I talked about major pairs. Since we'll not be trading, since we'll not be trading forex, we'll be trading more synthetics. We will not be going into all these major minor pairs, no stuff like that. All right, so let's go into the main thing. So this is your chart. So what you want to do, you want to analyze the market and see what the market will do in the future. I hope you get what I'm saying. You analyze from what the market is doing now. You can now predict what will happen in the future, what has not happened. Do you understand? I don't know if you get what I'm saying. I think I should use. Can you all hear me? Can you all hear me? Let me be sure that you guys are hearing me. Can you hear me?
Yes, sir.
All right. So, but I hope you're understanding so that I will continue. I hope you get what I'm doing. It's not like we are just moving like, oh, but I want to be sure that you guys are getting what I'm doing. So some basic stuffs, right? Some basic stuff that you need to know or understand before you can say, because as I open this chart now, you are seeing something like candles. You are seeing something like, okay, candlestick. This is what we call candlesticks. There are some things you just have to know before you trade the market. These are candlesticks. The blue one in your own, maybe when you first open your chart, you will see the red, you will see it as, let me just change my own to default, right? Or but if you open your own, you will see green and red, something like that. You see green and red. So the green is your bullish candle, the red is your bearish candle. So you have two types of candles. This is how basically the market also moves. This is just like a representation of how the market moves. And the way we don't use we use both line and candle. So you can just look at the line chart. This is a chart. This is the chart, right? This is the chart. You can look at the line chart and you can look, okay, where is the market coming to? You can see that since the market have been coming down. So we have, take note, we have two types of trend. We have three types of trend: uptrend, downtrend, and consolidation. So when the market is coming down, the market is on a downtrend. When it's coming down, the market is on a downtrend. When the market is going up, the market is on what? An uptrend. I hope that clears. Then when the market is neither going up nor coming down, so moving in a particular region. These are the three kinds of trends. Just explains it. But like I said, we don't use line. We don't use line. The major one we use line, but we don't use line majorly. The major one we use candlestick. That's why I must explain what a candle is. I said we have three types. You see, the market is coming down here in that zone. That's down, and now the market is now moving up here. So these are the three types of trend. We have downtrend, consolidation, uptrend. When the market is coming down, is downtrend. When the market is coming, neither moving up nor moving down, sideways, is called consolidation or ranging market. Then when the market is moving up, it's called uptrend. I hope that's clear. I hope that's clear. Is that clear? Is that clear? Is that clear? Is that clear? If that is clear, I will take this out. So now I was explaining something. I was talking about candles, right? I said a candle, we use this to just, this is a representation of the market price movement, how the market is moving, how the market is moving, right? If the market is coming down, you see candles printing up, going up like this. You see the market is coming down, red, going up, blue. You see, so this is the bullish and this is the bearish. So we have market went up, bullish, bearish, bullish, bearish, bullish, bearish, bullish, bearish. You can see. So this is how the market moves. Even if the market wants to come down, it's on a downtrend. The market will not just come down; it will move zigzagly. It will not just come down straight, boom. No, it will move zigzagly. That means you'll be seeing like this: go up, come down, go up, come down, go up, come down, go up, come down, just like that. I hope that's clear. The market does not just move once; it moves zigzagly, slowly, slowly, slowly. So in the candle, we have, this is a candle now. Let's use this one as an example. Let's use this one. Let's use that blue one. So the first one is the buy candle, which is the blue candle, right? So now we have four major. We have the body of the candle. This is the body of the candle. You see that blue, the body. This is the body of the candle. This is the wick. That line, this black line that went up is the wick of the candle. This other one that's still there is still the wick. Then we have the open close. Open close. I wanted to change to my. I wanted to change to a place where I can do replay, right? So let's go there. We just have that. So this is it. So now I think this will be better to explain a lot of things. Can you hear me? Can you hear me? Can you hear me? Can you hear me, guys? All right. So now, do you know why I want to use this one? Because it can do replay too. That other trading view for Derrick cannot do replay too, cannot backtest. It's not too sophisticated, you get. So now I want to do something. So this is the chart. This is GBP USD. I'm not talking about time frame. I'm not talking about. I just want to show you something. So now let's look at this. Let's look at this. All right. All right. So now this is it. This is the chart. So let me even go back here. You see this move that happened. Maybe for those of you that are very new to trading, you see this that Okay, see now, see how the market moves. Let me reduce the speed. It's going up now. It's going up. Can you see? It's going up. So your ability to predict that okay, this market will go up, right? This market will move from here all the way here, and you place your trade because it's not just for you to predict. You place your buy trade. Like I said, buying is you want to buy to the up. That is, you are expecting market to move to the up. If you want to sell, you are expecting market to sell to the down, to come down, right? Basically. So this move that now happened here, you can see you see in between them, you see bearish candle because, like I said, the market does not just move up. It will see come down. So you see this candle that appear here. This one is your bearish candle. This last red candle is your bearish candle. When you say bearish, the market is coming down. That means the market started selling from here. It opened here. It went up this week. What that week does is that let me use an illustration. Let me use this illustration to do week. So let's say this is the candle. When the candle open, the candle opens like this. It came down. It came down for some time, right? It came down before. It will now be coming up. It will now be showing weeks at the down. It will not be body again. It will not be something like this. You will not be seeing weeks. You now be seeing this thing that happened. This thing that happened is that the full body candle came down, but now went up. So there's the low, there's the high. There's what called low and high. So you see this part, this place is the high of the candle. Sorry. That place is the eye of the candle, right? And this place is the low. This is the open. This is the close. For a bullish candle, this is the next one is a bullish candle. You see, it went up. So this is the open. That means it started here before it got here. This is the close. Then this is the high. This is the low. I hope you guys are getting what I'm saying. Maybe I hope you're getting it. So now let me just so I said something about downtrend, uptrend. All right. So let's not even go too far. So let's come here. So our case study here is this. What's happening here? So you see that the market went up. There's what we call market structure. This is what we're doing now. But I think I'll touch on that on Sunday. But for now, just watch what I want to do. Higher market move came down, went up again, came down, went up again, came down, went up. You can see that these previous lows they were protected. It never broke until it broke. So this now indicates that okay, it's like the market is wants to start selling, right? The market wants to start selling because I'm just showing you how this works, how to okay you're analyzing the market. So now let's say where do you want to sell from? Where do you expect the market to sell from? So let's take our Fibonacci retracement tool, and we're expecting okay, let's say it will come to this zone. This is how we analyze. It will come to somewhere here. So there's a zone there, right? There's another block. I'm just showing you something. It's not like I'll still explain all these things detail. So let's say you want to be selling from that place, from this place, right? Your stop loss just above that area, right? Let me use something like that. And your TP to this next node. So let's play price to see what happened. So price came down, it's coming up to that place that you want to sell from, you want to place your trade from, but it never entered there, right? Instead, I was using the 50%. Instead, what happened? It came into the zone. It came into the zone. But then again, I'm just showing you something. Even if you miss this one, no wahala. You are expecting price to fall. So if you had entered from this place now, if you had entered from that place, let's say you when you saw the market came into that when you saw the market entering there, you place your set trade, right? And you you sell stop loss, everything and all that. When you say stop loss, it means you are not expecting the market to come to this place. So you want the market to drop from here. So if the market is going against what your prediction is, you'll be in loss, you'll be losing money. So instead of you just leaving your capital open to any kind of loss, you protect it with a stop loss. Like you know what you want to risk in a particular trade, then you know what you are targeting. So this is what that this tool is: your entry, your exit, your stop loss, your TP, your SL, your entry. I think are you getting it? If are you getting it? Let me know if I continue. Uh, are you there? Are you there? Are you getting what I'm explaining? If you are, just say yes, you can. You are getting, you're understanding what I'm saying, so that I will not just talk and talk and talk. All right, I think, I don't know. All right, all right, all right. Yeah. You get it. I know you get it. What I'm basically showing you, I'm showing you something. Like, okay, this is how the market moves. As the market is moving with what the market did previously, that's what's called price action. Without what the market did previously, you can analyze or tell where the market will go to. Like I said now, since you are seeing that the market is coming down, you will know that okay, the market should come down. With maybe your analysis, your tools, maybe you draw your trend line or something, but you are certain about okay, since the market is printing is coming down like this, the market should continue coming down unless there is a change to another side. So for example, we can say okay, this is a mitigation level. I'm just showing you something. I will explain all these things. So let's say you want to sell from that level, you want to place your trade from that level, you want to sell from that level. Obviously, you are not expecting, since you are is on a downtrend, you are not expecting this high to be taken out. So you place your trade, for example, and your stop loss is just above that high, and you target the next low. So when the market gets there, what happens? See what happens. It did not even tap in to where we wanted to buy from, which is your mitigation block. Almost tap in, few pips, and hit TP. So you see, because we knew what happened previously, we can tell what will happen in the future. That's what I want to just explain. It's not a big deal. Because there's something previously here. Eh? There's something here. Right? There's something here. I will explain these things individually. There's something here. So because there's something here previously, if I change to my line chart, I can say okay, there's a resistance zone there. So because of this, I can say okay, when market comes there, I should get some reaction to the upside because of is a key level or because of this thing I saw. I'm just showing you how you use previous what market did previously to tell it's price action. What happened previously, you can use it to predict where the market is going to. So play this and see. So let's see what happened if it gets to that level. You see this place. All right, it didn't even get there before it started buying. It did not even get it. But you see this level that we did, it still came back to that level, tanked again because that level is a strong level. Is a strong level. Is a strong level. So I'm just showing you something because of okay, this market might even see come here and react, come back here and react to the upside. You understand? Because of what we have seen previously here, that the market was resisting this level. So when it broke above that level, we can say, okay, since it has broken that level, let's see what will happen when price gets to back to this level. So this is what you are basically doing for trading. You are predicting, okay, will the market get come back here? See, the market did not come back, just flew all the way to the upside. It did not come back. But still, you still have this zone that okay, I'm still my eye is still on this zone. So market can even take time because this is the 4 hour. That means for every 4 hour time frame, there's each candle is 4 hours. So the market can even take a long time, days, weeks to come to this level. But you are still expecting something to happen when price gets to that level. So you see what happened when price got to that level. Price immediately bought. So you want to buy. So let's say your stop loss below here, and you want to now target this next level. So because of this thing that you saw, you waited for price to come back, and now so that's basically what you do. We are using analysis, what we can see to predict where market is going to. I don't know if you get what I'm saying. So you can now play price to see whether it will go up. So let's see. Will this price go up? Okay, it came down again, tapped in that same zone. All right, you see, it has stop loss. It has stop loss. You might see that this thing might even still get all the way here. You can see how it's still that level is still holding the price, even if your stop loss have been hit. You see how market is still pushing. So this is the way you predict the market and you follow the market. This is just the way it is. This is just the way it is. It's not magic. It's not like I did this before, but because of what I saw, that's why I now say, okay, because of this thing that I saw, this thing should happen. Do you understand? So the thing is, what you are doing is you are using previous history. Like I said, we are using history to forecast what will happen in the future. So I'll send a PDF on the group on candlesticks. I'll send candlesticks. I'll send maybe for on Sunday for our next class. Is that okay? Is that okay? All right. So what can you say you got from this class? What can you say you got? Is there anything you learned something? Obviously, what did you learn? What did you do you have any insight now on how this thing works, what the market is, how the market moves? But then again, we are going deep. Don't worry. You are just starting. This thing is deep. We're just starting. I want to hear your feedback so you can unmute yourself and talk. Unmute yourself and talk. Let me hear you speak. What's your take home stuff? All right, I can hear you. The floor is open. You can talk.
Okay, good evening. So, for my own take home, I learned about the different trends, uptrends, and consolidation and downtrend. Then I also
Okay.
learned about sessions of forex because I've never heard of this before. Yes,
Wow.
that was my own.
Nice.
And
Nice. All
I
right.
have a more of the difference between what candlestick does and what the trend does in the like analysis sort of, and what you need to start as a retail trader.
Wow. 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 That's very good. Thank you so much. That's very good. That's very good. So what you need to do now is you have to download the platforms, your MT5 on your phone, your MetaTrader 5. Um, we will not even do the linking or how to connect yet, but I want you to understand everything about the chart, everything about the chart because it's basically the chart. you on the chat, you on the chat. So you download MetaTrader 5, then the link, I think I sent the link to the group to create an SNS account, or you can basically go and create your derivative account by yourself. I have a partners link, but I don't really use it. So you can just go online and check deriv.com, create, sign up with them. That's the broker we use for volatilities. All right. So I think that will be all for tonight. I'll try and send, just remind me to send the PDF to the group. Basically, I'll send it to the group so that you guys can see some things for yourself. Basically, the basic things. So even in the baby peeps PDF I sent, you can go through it. You can see, check for in that PDF, check for candlesticks, check for, take note of what I'm saying. Candlesticks, write them down. Candlesticks, check for trends, check for market structure, check for technical analysis, check for all those stuffs, right? Check for those stuffs. You see them on that baby pips. Is there? Is there? You see them. You will see them there. They are there. They are there. All right. Are we good to go? Thank you so much for joining. I really do appreciate some the rest of us that joined said the network affected them and all that. I'm seeing their message, but I've not even replied them. But then again, they can always watch it on YouTube, right? It's on YouTube, and that is all for tonight. So we'll see on Sunday again. But before then, please, I really want you to go through the PDF. What majorly, you can even go online, go on YouTube and check for candlestick, watch videos on how these things works, right? Before coming for the class on Sunday, so that we'll go deep, we'll dive in. All right. So thank you so much. Thank you so much.